What is going on, my friends, and welcome back to another video on the channel. Well, in today's video, we're going to be covering Matic, as it has been doing absolutely amazing over the last few days here. And in the last video, I did let you guys know that I felt like this was just a relief rally. I felt like it was just maybe even a fake out to the upside that would be followed by a continuation to the downside. And I gave you all some key targets and key things to be on the lookout for. Well, in today's video, we're going to update on that, and I'm going to let you guys know exactly how I'm feeling and what I'm thinking now that we are starting to see a little bit of red in this market. So let's not waste any time at all, and let's go ahead and let's jump straight into Matic. So looking at Matic here, I gave you guys 3 key points to look at. Key point number 1 was, of course, the 20-day simple moving average currently sitting at 49 cents. Key point number 2 was this range between 57 and 47 cents. As I said, that this was a zone of confluence that was going to be extremely important to see if the bulls or the bears were going to step in more significantly while we were within this area. The final zone that I told you all to look for was this trend line. I said that as we started to approach this trend line, there is a strong chance that we do get some rejection, and that rejection is going to tell us everything we need to know about what to be on the lookout for, right? So as we can see, we did first and foremost clear the 20-day simple moving average with no problem at all. We then did break above our key level of resistance, this key level of liquidity, as we can see here, but we did start to work our way back up to this trend line and eventually getting rejected off of it, as we can see today. So now that we are starting to see rejection, now that we are starting to see this thing pulling back, it's giving us a clear picture again of what we need to look for. Now, the reason that this zone, let's kind of zoom back and talk about why this zone was so important. The reason this zone was so important was because of what we saw back here. What we saw back here was that as the market was falling, the moment we lost that 60-cent level, this zone held as the zone of support where all of the bulls stepped in. The bulls started buying and buying and buying and buying and buying, pushing the price steadily up to the upside and confirming it as they stepped in before we even came back into the zone, establishing some support on this key level here. Now, what's interesting though is that as we did see the bulls step in right here and right here, we didn't see them step in like they did before. As we started to fall through it. So the question then became, well, are they going to step in here? Are they going to take profits here because they lost money off of the purchases they made here? Or are they going to buy in this zone and start finally trying to take advantage of growth from this area like they were back here? And what we can see is that this was a key zone of bullishness, right? As soon as we entered this zone, we went straight up to the top side. The bulls pushed this thing straight towards the top side again, and it was just absolutely amazing. And so the fact that our bulls are still around in this zone is extremely important for what comes next. Well, what comes next is, of course, this retest. We need to see this thing reset. One of the reasons I told you all that this very possibly could just be a fake bounce to the top side was because of what our indicators were showing. You look at the daily RSI, right? One thing we can see is that we are still setting higher highs on this daily RSI while still setting lower highs on the price. That is bearish divergence. That goes to show that although momentum is changing, the bulls aren't having an equal amount of success. Of course, that is bearish. If we look at something like the 4-hour MACD, the 4-hour MACD is crossing bearish for the first time in about a week. If we do look at the 4-hour RSI, it is also starting to push towards the downside, coming off of an overbought territory. All of these things say that it is extremely likely that we do start to pull back to the lower, some of these lower 40 to 50 cent levels here, okay? So what we need to pay attention to now, the next thing to be on the lookout for, and the way in which I'm going about this, is to now pay very, very, very close attention to this zone between 57 and 47 cents, especially this 20-day simple moving average. Something I know about Matic is that if it breaks above the 20-day SMA, it will oftentimes come back to retest it. Let's go over this, right? We broke above the 20-day SMA here, we came back to retest it. Once we held it, we continued to the top side. As you can see here, this time around, when we broke out above it, we came back down to it, we failed to hold it, which started this continuation to the downside. The way we interact with this 20-day simple moving average, once we come back to retest it, will tell us everything we need to know about if we're going to bounce off of it and continue into a further uptrend, or if we lose it, if we're going to likely continue back down to some of the lower levels that we put in back here, okay? So what you need to be on the lookout for over the next 48 to 72 hours as we go into Saturday, Sunday, and Monday is how do we interact with this zone between 57 and 47 cents. If we stay above it, we hold above it, we bounce off that 20 SMA, and we break this trend line, I personally am going long. In my opinion, we've then reset our charts. We saw a cool down on the hourly RSI, hourly MACD, And in that perspective, we are very likely coming towards a 70 to 75 cent level. And I, of course, do want to be buying in to take advantage of what could be 40 to 50% in gains. But if we do start to see the price rolling and losing that 20-day SMA, and then further losing 47 cents, it is very likely we do come down to this low 30 level, 35 to 30 cents. And then at that point, things could start to get very, very ugly. Okay, so it is an extremely crucial point. This is the moment. This is the moment we need to pay the most amount of attention to what's going on with the charts, because it is going to let us know everything we need to know about should we be buying, should we be shorting, or not doing anything at all. So overall, I know it's a very quick, very easy and simple video. I wanted to make it as simple as possible for you guys. It's Saturday. Go enjoy your day. Don't look at these charts too much. Of course, just turn on the notifications so if anything big does happen, you are one of the first ones to know. But with that said, again, that's going to be about it for today. Pay attention to the zone. It is extremely important, and it is going to tell us everything we need to know. That is what's most important. These charts, these prices, they will do the speaking for us. Our job is to just sit back, watch, and then analyze what we need to do in response. So with that said, that's going to be about it. Of course, I hope you guys did enjoy, and I will see you all next time. Peace.